essentially more than 40% of public equity values in the US now are one way or another tied into some sort of theory of AI as the future driver of value. In venture capital, sure, is much higher than that. An overwhelming amount of GDP growth in the US right now is just being driven by capital expenditures into these data centers. I think AI is going to be an extraordinarily valuable technology. There's going to have huge effects. I would sort of liken it to the effect that the internet had. Unfortunately, that does not justify the current valuations and current level of investment.
It's a mania.
It's a bubble.
Yeah.
And like all bubbles, it will pop at some point. In a sort of healthy financial sector, you get overweighted to a bubble and it pops and you sort of get some deflation. I don't mean in the monetary sense, but, deflated of the bubble when that happens. And, that's the sort of thing we saw around 2000, 2001 with the dot-com bubble. And that's sort of fine. That's the way these things go. You do run a risk of getting to a point where so much value is tied up in these things, where essentially everybody has convinced themselves that they are much richer than they actually are, that their retirements are in better shape than they are, that GDP has been growing healthily in a way that maybe it hasn't, that you get a much more systemic crisis if it unwinds.